Hi everybody, Terry Ryder from hotspotting.com.au. This is my regular weekly feature, The War on Misinformation. I saw an article published earlier this week by Peter Switzer, who's a financial commentator and a television presenter on Fox, has a regular show talking about all manners financial, share market, etc. And he often comments on the residential real estate market. One of the few economics, financial type commentators out there who actually has something sensible and well informed to say about residential property, because most of them don't. And his article began with the question, what happened to the 40% fall in house prices? And what he's referring to there is the reality that around 6 months ago, the early part of this year, there was a whole range of forecasters, economists, and other pretenders forecasting that prices, I think they're primarily referring to Sydney and Melbourne, were going to fall 40 or 50%. It was clear at that time that the previous boom in the two biggest cities had come to an end, and that there was a correction underway, but all the usual suspects were lining up to predict a catastrophic drop in property prices. And now it's clear, once again, that they've been wrong, because now we're seeing growing evidence that markets in the two biggest cities are recovering and prices are starting to rise again. But it's useful, we always keep a file on predictions, because we know that most people who make big, loud forecasts, particularly the sensationally negative ones, in residential real estate are almost always wrong, but media never goes back to check. They don't care. So the same people keep popping up, making the same erroneous forecasts, and they keep getting away with it because credibility apparently is not a criteria for getting lots of time in media, making sensationally Armageddon type forecasts about the real estate market. Now, Steve Keen, anyone who's followed real estate for a while will know that name. Back in 2008, he became famous by being the first of many to forecast that, around the time of the GFC, that property prices in Australia were going to absolutely collapse. They were going to fall 40, 50% across the board in the next 12 months. Now, he stood up and said that, and a year later, it was evident that he was wrong, because prices, generally speaking, didn't fall at all. In most of the major markets, they continued to rise. But Steve Keen, who is kind of an academic, a university academic in the area of economics, has been making this 40% drop in Australian property prices forecast pretty much every year since then. So he's had 10 years of popping up regularly, forecasting that this is going to happen. He's been wrong every year. And you'd think that by now, he might be a bit gun shy. He might have come to the conclusion, maybe I should keep my head down, because I keep making these erroneous forecasts and making a fool of myself. But there he was in May this year, once again making that same forecast that this year, where we're going to see property prices, particularly in the major cities, falling 40%. So once again, poor old Steve has got it wrong. But he was not alone. In April, Andrew Maloney, the founder of flatmates.com.au, was in the media forecasting that Sydney prices were going to drop 50%. The usual suspects at UBS, their economists are always forecasting dire outcomes. Real estate, so back then they were predicting massive decline in prices. And Shane Oliver, poor old Shane, he's the senior economist at AMP Capital. He's always in the media. I don't know, media doesn't care about credibility. They never look at forecasters' track record, or whether they ever get it right or not. And when it comes to residential real estate, nobody in recent times in Australia, not even Steve Keen, has got it wrong as often as Shane Oliver has. He keeps making major forecasts which are proven spectacularly wrong. So back in February, he forecast that Sydney and Melbourne prices were going to crash at least 25%. So here we are in spring, beginning of September, and all the evidence suggests that all of those forecasts have been wrong. Certainly there was a significant correction, generally speaking, in prices in the two biggest markets, but nothing remotely close to what these people were predicting. The people who did get it right, the genuine real estate analysts, the ones who are not grandstanders. They're not trying to generate cheap publicity by saying something sensationally negative, but to provide proper analysis to inform the public. People like Louis Christopher from SQM Research. Now, what he forecasted back at the study in terms of the correction in Sydney and Melbourne has pretty much been what's happened. In the last 12 months, at the worst, at the bottom of the trough, Sydney and Melbourne, as a generalised figure, were down about 10%, but now they're rising again. So it was, the inevitable correction happened. It was significant, but nowhere near the catastrophe that was predicted by so many of these pretenders like Steve Keen, Shane Oliver, and the so-called economists at UBS. So what's actually happening? Well, we've had the recent figures from CoreLogic, and media tends to publish these as absolute fact when they're not. Their figures are as rubbery as anybody else's. And quite often figures from other reputable research sources contradict their figures. So here we are. I do like the research that comes out of SQM Research. I mentioned Louis Christopher. That's his business a moment ago. He produces all kinds of useful data, and it's a great website to know about if you're interested in property investment. You can get good information about vacancy rates and stock on the market, what's happening with prices and rentals. So this week, every week, SQM Research sends out its prices index, what's happened in the last week, what's happened in the last month, and also the figures for the last 12 months. And it's really interesting to look at this week's because all 8 of the capital cities have had increases in their prices index in the last week and in the last month. So a number of them are still down in annual terms, but the short term, the most recent evidence is that prices are starting to rise in all the major markets across the country. In some cases, not a huge amount, but the trend is up in all 8 capital cities in terms of the weekly prices index and the rolling monthly index. Sydney's up significantly, Melbourne's up, Brisbane is rising, Perth, which according to CoreLogic is still falling, according to that's contradicted by SQM Research, which says no, Perth is actually showing some significant signs of prices rising, and we tend to agree with that based on our research as well. We think CoreLogic's got that one wrong. Adelaide's rising. Adelaide's a good steady market that never gets any airplay in media. Most underrated market in capital city Australia. Canberra is up in terms of the weekly index, the monthly index, and the annual index, and so is Hobart, which continues to be pretty strong. Even Darwin's their market's been in the toilet for the last 4 or 5 years, and now we're seeing, based on this evidence and other evidence we've seen, Darwin's on the way back. Its weekly index is up, its monthly index is up, and in annual terms, it's now up 1.2%. So Darwin, on that evidence, is on the way back. Now, continuing the theme of talking about prices, there was an article in Smart Property Investment, online magazine, quoting the comparison website Finder, which is always in search of free publicity. And they made the statement that Sydney has traditionally been Australians' darling of the property market in terms of where people want to invest, but it's no longer the belle of the ball. This refers to a recent survey which finds that the so-called experts that Finder surveyed nominated Brisbane and Melbourne as the top spots to invest now, and Sydney was well down the list. And he was Graham Cook, Finder's Insights Manager, was commenting that Sydney has traditionally been Australia's darling, but is no longer. Well, actually, no, Graham, I don't know where you got that idea from. Sydney has not traditionally been Australia's darling for property investment. Sydney's actually been an underachiever. Certainly for the last 15 years, it's for 10 years did pretty much nothing. Prices showed little or no growth, and then in about 2013, it had a long overdue boom, but that 5-year period of boom does not make Sydney a traditional darling of the property market. If you look at it longer term, and when you use the word traditional, I think you should be referring back further than 5 years. The last 20 years, data showing how much property prices have grown in the major cities in the last 20 years, Melbourne is number 1 by some margin. Hobart is number 2. Canberra is number 3. And amongst the capital cities, Sydney comes 4th, marginally ahead of Adelaide. So certainly is a long way short of traditionally being the favourite place for people to invest in real estate. It's been an underachiever. There were some other figures that we've seen where researchers, I think it was PIPA, the Property Investment Professionals of Australia, divided the last 30 years into 5-year periods and looked at which of the major cities had led on capital growth in each 5-year period for the last 30 years. Well, Sydney only features once as the market leader, and that's the most recent 5-year period. Melbourne at one point was the leader, Brisbane's had a turn, Perth's had a turn, and Darwin, surprisingly, has twice been the leading capital city for growth in property prices when you divide the last 30 years into 5-year chunks. And Sydney has only featured once. It's actually been traditionally an underachiever. And when you look at the rankings over the last 20 years, it ranks a long way behind Melbourne, Hobart and Canberra. So just referring still on the theme of what's really happening with prices, there's that pervading myth and misconception that you've got to invest in the prime areas close to the CBD to get the best growth, etc., etc. Looking at Melbourne, the figures for the last 12 months and also the 10-year growth averages totally contradict that notion. I mean, there's never been any statistical or research evidence to support the notion that you've got to invest close to the CBD to get the best growth. You've got to invest in the prime prestigious suburbs to get the best growth. That's never been supported by research evidence. In fact, whenever we've researched, we find that mostly it's the outer ring areas, the more affordable areas that over time have the best growth rates. And certainly Melbourne, the last 10 years, the 10-year growth average for the most expensive suburb of Melbourne, Toorak, is about 3.5% a year. Hawthorn's 4.5%. Melbourne is 4.5%. Armidale's 3.5%. So very, very mediocre long-term growth rates in the suburbs of Melbourne, which have median prices around, 1.5 million, 2 million in the case of Toorak, above 3 million. So their long-term growth rates are very poor, whereas you go out to the humble workaday suburbs out in the outer ring, Melton South, about as far out as you can go and still be in the Melbourne metropolitan area, and about as humble as suburbs get. Really at the bottom of the market spectrum, Melbourne South's long-term growth rate is 8.1%, more than double that of Toorak. Cranbourne North, down in the far southeast of the Melbourne metropolitan area, is averaging 8% a year over the last 10 years. Melton itself, 7.5%. Cranbourne, 7.8%. Epping up in the northern suburbs, the northern fringes of Melbourne, it's averaging better than 7% a year. Sunshine West, 7.5%, Sunshine North also 7.5%, etc., etc. And also I would point out that most of these suburbs actually haven't had prices fall in the last 12 months. The top end suburbs of Melbourne have, they're down a lot. Toorak's down 30%, Hawthorn's down 34% in the last 12 months in its median price. St Kilda's dropped 37%. But these outlying suburbs in the outer ring areas, Melton, Cranbourne, Epping, etc., their prices haven't dropped. They're still higher than they were 12 months ago. So that's another one of those myths and misconceptions that's often repeated in media, telling people you've got to buy prestige to get the best growth. Well, it just ain't so. All right, that's probably enough of a rant for this week. That's my war on misinformation for now. Let's do it again roughly the same time next week. Bye for now.